then people will say, this guy doesn't understand what's happening and money can flow out of India in a big way. So we are simply conforming and keeping in step with everybody else. And the question, will this solve inflation? Sir, as I said, it's one step in a journey. Neither in the USA or India does anybody think one step is going to complete the journey. So this is one more step, and it is not going to solve the problem. But you say it is one step towards a solution. In India in particular, I mean, everybody knows that if you raise interest rates, how does this cool inflation? It causes inflation by slowing down the economy and saying demand goes down. But if the particular inflationary shock has been caused by things like food and fuel, nobody believes that these are highly sensitive to interest rates.
Right.
Economic growth may be a little more sensitive.
Right.
But food and fuel are not sensitive.
Exactly.
Secondly,
Mr.
if
Iyer,
it's imported inflation.
those key areas that you're talking about, Mr. Iyer, if I may interject, at the consumer level, that pinches most. The middle class and the lower middle class feel the pinch of a price rise when it comes to food and oil prices. So can a hike in interest rates actually bring down these? Help us understand this phenomenon that you're saying, that those are the areas that we may not see an immediate impact come in.
Absolutely. Which is why the government does other things. It tries to cut taxes. It tries to ban exports of various things. It may cut the import duty on edible oils. These are the kinds of actions which may help the consumer immediately, but not a rise in interest rates. So as I said, there are different arrows in your quiver. For solving inflation, the government has various other things like changes in duty structure or changes in the import-export policy. Those can help immediately in the case of food and fuel. What RBI is doing is a rise in interest rates is an attempt much larger the economy overall to try and cool down demand. So these two should not be confused. Reserve Bank is not going to solve food and fuel.
Mr. Iyer, now that inflation has been projected to rise to 6.7% by the RBI, can we expect more interest rate hikes in the future? And if they are to come, is there the possibility that the RBI would be getting ahead of itself somehow and actually cause the economy to slow down, if not drive into a recession?
No, the economy has to slow down. What is the meaning of raising interest rates? For what? For what? I mean, there has to be an aim. The aim of higher interest rates is to slow the economy. Let's be quite clear about this. You don't do it just because the hell of it. You are trying to slow the economy and to that extent slow demand, right? And what's very clear is that the world over this is happening. So therefore, slowing of the economy is not an accident. Slowing of demand, slowing of the economy is an aim of policy, the world over. Now, will this tip you into an absolute recession? We do not know. Abroad, in America and Europe, there is the possibility that it will, and they say it may be a mild recession. But everybody is aiming at slowing the economy. And in India too, the economy will slow. Let's be very clear about this. The aim is not to somehow say growth will not be affected at all. Please, let's not be naive or stupid. The aim, the World Bank has just come out with its latest projection on the world growth is going to slow down to only 2.9%, which is not very far from the 2.5%, which is called a recession.
Correct.
So the world over, the economies are going to slow. We are trying to slow it. We hope it will be short of a recession, but definitely.
What I meant to ask Mr. Iyer is, of course, a slowdown will happen, but at this time, when perhaps there are indicators that we might see a stabilization in oil prices. Of course, there are a lot of uncertainties. But if that were to happen, if home sales don't take as much of a dent as is largely expected, if those parameters are actually in control, then by hiking interest rates too fast, are we actually playing against our growth story?
We are most definitely going against growth. I mean, I don't know why we are going over this again and again. The aim is to cool overall demand. This is not aimed at solving the price of oil. Please, that's a separate issue.
Sure.
There are specific things like oil and food for which, as I said, we have separate arrows against them, like changes in the tax structure and import-export structure. And what we are doing at the macro level, interest rates, is cooling the economy as a whole.
Fair enough.
Aim
Point
is
taken.
to slow the economy.
Correct. Mr. Iyer, with a hike in interest rates, I want to ask you if it's natural to expect these loan rates to go up. I mean, our EMIs are bound to go up. Now, will these interest rate hikes dent demand in the real estate sector? Like you're saying, there's going to be a slowdown. Sectors, by and large, are going to get affected. How much of an impact do you see in that key driver of the economy? How much do you think a dent in real estate sector's growth is actually going to hurt us?
It will be significant. I said there is no point having an interest rate if the effect is not significant. So yes, wherever there is borrowing involved, demand backed by borrowing is going to diminish. Whether it's construction, whether it is air conditioners, motor cars, anything that is bought on installment, the interest rate will make things effectively more expensive on the equated monthly installment. That is the aim that is going to happen.
Now that the World Bank, Mr. Iyer, has cut India's GDP growth for FY23 to 7.5%, and our GDP per capita income is still below our pre-COVID levels, typically our understanding is that high interest rates puts less money in the consumer's pocket. So are we to believe, as an extension, that our GDP growth is going to remain stunted with these sustained hikes in interest rates?
We are seeing all kinds of projections on what our GDP growth is going to be. Initially, if you look at the world estimates, they thought the growth initially that the growth this year might be 8.5%, even 9%. Those projections have been coming down, and the World Bank has reduced it from 8 to 7.5. The Reserve Bank having a far more conservative growth estimate of only 7.2, and is still remaining at 7.2. So I would say in India, both the budget and RBI, they started with very, very cautious underestimates of the real possibilities. So I think they were prepared for the fact that there might be a coming disaster. So let us not predict what might be at that time have been thought to be realistic interest rates. They said because disasters are possible, let us be very conservative. And that is turning out to be wise. Yes, the original projections of the World Bank 8.5 was far too optimistic. So now the World Bank says, okay, maybe only 7.5. I would say it might be even lower. If you are going to have, now these things are beyond our control. The war is not under our control. The sanctions, the consequences are not under our control. At this point of time, the consensus is that in Ukraine, there is going to be a long, grinding war carrying on at least for many, many months, maybe into 2024. Right. If that is the case, then I'm afraid it's very negative, and your growth is going to be far lower than even 7%.
Fair enough. Mr. Iyer, it's always a pleasure getting your perspective on all matters economics and where India stands currently. It is still a rather precarious position. We will kind of keep tracking it against where growth gets hit in the rest of the world too. But we will keep reconnecting with you to get your perspective in the future. Thanks very much for joining us this evening. Now, the DEA Secretary, the Department of Economic Affairs Secretary Ajay Seth, has spoken to reporters after the outcome of the MPC meeting, and he says that the RBI is taking all steps necessary to support the economy. This is what we heard from him.
Reserve Bank of India has taken the steps which are needed for the economy, and as we have noted in the past since morning, and there are domestic challenges there, and more are larger ones are there in the global scenario. So these actions are a combination of that. So whatever it takes for monetary authorities as well as fiscal authorities, those actions are being taken. That is what the entire effort is, that we manage to moderate the inflation, at the same time keep the growth story or the growth efforts as earlier. So these are the challenges are there. And apart from that, as Chief Economic Advisor just about some time back mentioned, that apart from the growth and the moderating inflation, the external management of the rupee, and keeping the fiscal balance, or I'll say it in the sense that what the path Honorable Finance Minister in the budget had announced, these are the 4 parameters which we're working. So both monetary authorities and the fiscal authorities are working on that.
That's what we got from the DEA Secretary. Now that the RBI's rate decision has turned out to be on the higher end of the spectrum of expectations, India Inc., on its part, seems to have taken this entire development in its stride. The CII, the Confederation of Indian Industry President Sanjeev Bajaj, believes that Indian macros are better placed than most Western countries. And he also sees a shift taking place in the approach of banks to corporate credit. Shashank Srivastav of Maruti Suzuki is someone else from the corporate world we spoke to. And he says that the revised Q4 inflation estimate by the RBI is actually a positive. He is expecting